Hey everybody, we are live. It is March 14th, 2023. It is a Tuesday. You're on with goldsilverpros.com. I'm your host, 𝘺𝙀𝘾𝙊𝙈. It is Cowboy Metals Live, where we broadcast from the great state of Texas. And we take no BS, and we're going to check the master controls to make sure everything is working appropriately. Thank you, everybody, for joining the program today. Looks like sound is working and everybody is in. Thank you for joining the program. Today, we're going to talk about the continuation of the banking crisis. We had a lot of coverage this weekend. Well, we've got more news for you. Banking giant Credit Suisse has failed an audit. That's right, ladies and gentlemen, they failed an audit. We'll get into a little bit of the detail, what we can find on that, which isn't a whole lot, although it could be very damning. And we'll get into what that means for the rest of the banking complex. Of course, we'll give you a couple updates on the SVB and Signature piece as well from what's happened over the last couple of days. That's what we're going to be talking about so far. 80 in. Thank you, everybody, for joining. Thank you, Gilbert Rogers, for being here. James Richter for being here. Jeff Rosenberg, E660, who is always here with us. Jerry, Daniel, and everybody else on the program. We do have a poll up. What is your level of concern with the banking system? You can answer that poll in the chat simply by choosing one of the answers. Right now, High is leading with 38%. Well, Extreme just jumped up to 38% with High at 37. 75 votes in. Everybody make sure to get your vote in there as we talk about it. Question in the chat, what is an audit? Well, every single year, publicly traded firms here in the United States go through what's called a Sarbanes-Oxley audit. That's a result of the Enron crisis. And those standards were put out originally in 2002, first tested in 2004. And it is a review of financial control reporting, meaning did the entity do enough to make sure that the financial reporting or the controls of financial reporting operating effectively. We'll talk about that more in a minute. But I wanted to give you guys an update first on what's going on with the existing issues in the banking system that we've all been talking about. As I go to the news, we see that too big to fail banks are being flooded with deposits as a bank run drains the small banks of cash. There's pressure right now on the regional banks and small banks because people think that the too big to fail banks will be the ones bailed out and the small banks will be the ones crushed, which could be the case happen if the Fed and the Treasury and the government don't decide to backstop the entire banking system. So people are running from these currently solvent smaller banks and putting money into bigger banks, which really isn't going to help things. This is people's reaction to bank closures. It's going to cause further problems in the lower tiers of the banking system. It could cause some of these to go bankrupt because they won't have enough cash flow. It could cause the Fed and the Treasury to step in and help these banks. So for just that reason, the immediate reaction to the banking system crash, I expect there to be potentially more banking system crashes as we go on in the smaller banks. All right, looks like our sound is still good. Thank you, everybody, for joining. Remember to jump into the poll. Signature Bank, another thing that came out of this is Signature Bank. Barney Frank of Dodd-Frank fame, or I'm sorry, Barney Frank, congressman who basically is now a board member, I'm sorry, of Signature Bank, was talking about why regulators may have shut it down. He said, operations were going well. Yes, we had a run on deposits and we're negative $1 billion on cash flows, but the bank was running well. They didn't give us an opportunity to rectify it or to get bought out or do something else. They said they just closed it. And he thinks that has to do with Signature Bank being related to the crypto complex and FTX, that regulators are super tight on anything crypto in the United States right now. They don't want to allow any further contagion around what had happened to FTX and some of the other issues. So Barney Frank, as a board member, is thinking that they picked on Signature, even though they could have been a going concern, although Signature did have some issues with deposits. And I wanted to show you something, guys, that's emerged as a result of what Signature have been doing. Apparently, they've been doing a series of commercials, and these are pretty cringeworthy, but I have to show you what's going on. You have to wonder what happens to a bank when they run into a liquidity crunch and what the bank's managers were doing. Were they properly managing, the reserves and the assets and all of those types of things? We'll look at what Signature Bank employees were doing. They were doing these really goofy commercials. I'm just going to play a couple of these. They're on Twitter. You can go look just to show you what the bank employees have been doing instead of potentially maybe managing the bank's risk.
Some banks will sell their souls, some banks just feel real old. I wish they were already sold, but I still wake up, I still have the dream. Oh Lord, I still know my bank can be right.
All right, and then you've got more over here as bank execs trying a comedy sketch musical combo like they're on SNL.
All we have to do is apply to 19 federal and state banking agencies. I happen to know for a fact that won't happen. Seriously? Why not?
This is Signature Bank Executives, ladies and gentlemen. We got another one here. All right, in any case, I thought that was funny. I wanted to put it up for you guys to take a look at. It is just, you can't make some of this stuff up. Oh gosh, what's going on with the bank? What the hell were they doing? I mean, I know it's horrible timing for those type of videos to come out. They're trying to get new deposits and they're trying to go woke and appeal to younger generations and things like that. Boy, that just didn't age well for the bank, and it was just horrible news to come out. Well, we've got more, ladies and gentlemen, getting a little bit more serious again. After all that goofiness, we have, yes, a downgrade from Moody's. Moody's cuts outlook to the U.S. banking system to negative, citing rapidly deteriorating operating environment. I can't imagine watching these videos how anybody would think that we're in a rapidly operating or deteriorating credit environment when bank executives are doing such a great job of doing skits on social media. In any case, Moody's says it's on Monday cut its view on the entire banking system to negative from stable. The big three rating firms cited a rapidly deteriorating operating environment despite regulators' efforts to shore up the industry, and a harsh blow to an already reeling sector. Moody's Investors Service on Monday cut its view on the entire banking system to negative from stable. This is definitely not a good sign, ladies and gentlemen, that this is happening. It's not a good sign at all that we're dealing with these types of issues in the banking system. And that was just over the weekend. And again, it had to do with mark to market, or the market value. It started all at SVB, the market value of treasuries. The market value of their treasuries had fallen so much because of rising interest rates. Why? Because what the Fed had done. The Fed, this is an effect of the Fed tightening policy. We said as soon as it happened, it was going to crash institutions and cause lockups in the system. And it happened in the banking system. SVB didn't have enough assets to meet requirements, and they were trying to sell and couldn't. So they had to go try to raise private money. Their depositors got word. They drew out $42 billion. Then $10 billion gets drawn out of Signature Bank next, and then they go bankrupt because that put them negative on their cash flow. So all of a sudden you start to see us run on the banks. Well, we're not done yet, ladies and gentlemen, because in an unrelated but probably more important at the end of the day announcement, we have Credit Suisse failing an audit. Yes, that's right, ladies and gentlemen. The mega bank that we've all been watching, due to its recent problems, the auditor found material weaknesses in its financial reporting, and they're going to scrap their bonuses. This is a CNN business. It says here, Credit Suisse acknowledged material weakness in its financial reporting Tuesday as it scrapped bonuses for top executives in the wake of the bank's worst annual performance since the global financial crisis. The embattled Swiss lender also said Chairman Alex Lehmann had proposed voluntary waive a share award worth 1.5 million francs, and they canceled their bonuses. They said in its annual report that the group's internal control over financial reporting was not effective because it failed to adequately identify potential risks to financial statements. Now, I've got all sorts of comments on this, and I'll get into in a minute, but what you have to know is they had their all-time worst performance. Here you go, as reported in The Guardian. Swiss Bank is cutting 9,000 jobs in a restructuring program after a series of scandals. They have scrapped its annual bonus for top executives after the scandal hit. Swiss Bank reported its worst full-year loss since the 2008 banking crisis. The lender on Thursday revealed a 7.3 billion Swiss franc net loss for 2020 as clients withdrew their cash at a dizzying pace, and the bank experienced a significant drop in income from its wealth, asset management, and investment management divisions. The bank said none of its executives, including the new chief executive, 𝘎𝑃ₛ, would receive bonuses after the poor performance. Meanwhile, the 2022 bonus pool for Credit Suisse bankers has been reduced by 50%. The overhaul, listen to this, the overhaul follows a series of scandals in recent years. Credit Suisse was embroiled in the collapse of lender Greensill Capital and the U.S. hedge fund Archegos Capital in 2021. Remember all that, guys? That was a big issue. That year, it also admitted to defrauding investors as part of the Mozambique tuna bonds loan scandal, resulting in a fine worth more than 350 million pounds. In 2022, Swiss prosecutors found the bank guilty of helping to launder money on behalf of the Bulgarian mafia. No, I'm not making this up, ladies and gentlemen. The bank has denied wrongdoing and said it would appeal against the ruling, but it was found guilty, apparently, according to this article. Credit Suisse also came under fire after the Swiss Secrets investigation, which showed it had served clients involved in torture, drug trafficking, money laundering, corruption, and other serious crimes over decades. Commenting on full-year results, Corner said, 2022 was a crucial year for Credit Suisse. We announced our strategic plan to create a simpler, more focused bank built around client needs. Yeah, because you have all these scandals. So let me paint the picture for you here. You have all these scandals. Well, we'll continue reporting, then I'll paint the picture at the end. According to a CNBC article on the matter, Credit Suisse, in late 2022, the bank disclosed it was seeing significantly higher withdrawals of cash deposits, non-renewal of maturing time deposits, and net asset outflows that substantially exceeded the rates incurred in the third quarter. So in other words, this is a bank run, ladies and gentlemen. It's the same thing that happened to SVP and Signature, although people aren't talking as much about it. This is a bank run at Credit Suisse. It's a completely different, unrelated issue. Bank runs are occurring all over the economy, not just in the tech and the crypto sectors. Credit Suisse saw customer withdrawals of more than 110 billion Swiss francs in the fourth quarter, according to CNBC, as a string of scandals, legacy risk, and compliance failures continued to plague it. Well, let's take a look at the annual report. Here's the Credit Suisse annual report for 2022. And what I want to do first is go to the announcement of material weaknesses you can see on page 50. It says here, management says, we have identified material weaknesses in our internal control over financial reporting as of December 31st, 2022. We are subject to requirements in the Sarbanes-Oxley Act of 2002 as amended to perform system and process evaluation and testing of our internal control environment. And I'm going to skip down here. The material weaknesses that have been identified relate to the failure to design and maintain an effective risk assessment process to identify and analyze the risk of material misstatements in its financial statements, and the failure to design and maintain effective monitoring activities related to providing sufficient management oversight over internal control, involving appropriate and sufficient management resources to support the risk assessment. And listen to this one, assessing and communicating the severity of deficiencies in a timely manner to those parties responsible for taking corrective action. So they have failed their audit. We're going to go down to the auditor's report on this. Now, they don't give a ton of details. There's some things I can infer, which I'm going to do here, although they don't give a lot. This is a report of the statutory auditor. This would be PricewaterhouseCoopers, PwC. And they're talking just basically at the end of the day, they think the financial statements do reflect the operations of the business. But this is where you get down to the adverse opinion. If you scroll down to the second filing with PwC, report of independent registered firm, opinion on a control over financial reporting, it says, we have audited the internal control over financial reporting at subsidiaries based on established criteria. In their opinion, the group did not maintain, right here, in our opinion, the group did not maintain in all material aspects. Let me go ahead. In our opinion, the group did not maintain in all material respects effective internal control over financial reporting as of December 31st, 2022, based on criteria established by the internal control framework. A material weakness is a deficiency or a combination of deficiencies. Those will be significant deficiencies. A combination of significant deficiencies in internal control over financial reporting such that there is a reasonable possibility that material misstatement will not be prevented or detected. In other words, the controls over place to ensure that everything was reported correctly. And as a result, Credit Suisse has gone back over the last 2 years and adjusted its cash flows. Now, I don't have an analysis of its cash flows handy. I didn't have time to do it, and I haven't seen it done elsewhere. But their cash flows have been amended. And if you look at the risks back in this other report, let me go back to page 260, we're trying to draw ideas for what actually could have been the risk, because they don't say it in the report. And I've been through this report, and they don't just come out and say, this is our issue. But if you look at their at the risks of what could be critical audit matters, here's things that the external auditor has a hard time valuing. And so they're putting these out as critical audit matters. And what this means is it's audit risk. It means that certain things are so hard to audit, it creates audit risk that even if the audit comes out and they say, we believe that these financial statements are correct, there's still risk to that because things that are very hard to measure. One of those is fair value of certain level 3 financial instruments. It just means instruments that don't trade freely on the open market that have good pricing. Well, if we look at over Investopedia, what's a level 3 asset? They're financial assets considered to be the most illiquid and hardest to value. They're not traded frequently, so it's difficult to give them a reliable and accurate market price. Examples of level 3 assets could be mortgage-backed securities, private equity shares, complex derivatives, foreign stocks, and distressed debt. So Credit Suisse, the auditor, is noting that there are some issues maybe in valuing level 3 assets, which is common in the marketplace. But if we look at what happened to Credit Suisse and their internal controls over financial reporting and their ability to manage risk, it's possible they weren't managing risk with relation to certain of these level 3 financial assets. It could be that they were having trouble with credit losses for some of their loans and accounting for those. That could be a risk. Accounting for litigation, increased litigation that they've had and expected litigation as a result of the problems they've been having and the scandals. What were the scandals? All these scandals I just read to you has led to the auditor basically saying there's going to be so much litigation here. This is an audit risk. We don't know if the company's accounted for this because of the potential additional litigation. And imagine the litigation they're going to have now that they've admitted to a material weakness in financial reporting. And then goodwill impairment. So there are areas in which this could have been the cause. We don't know the cause right now, the restatement for Credit Suisse, until we see additional information come out on that. But apparently Credit Suisse is in super big trouble. And what does this mean from an audit perspective? Let's put 2 and 2 together. When I was an auditor and you had to, in the auditor, the external auditor, which I did, external auditing, internal auditing, all types of auditing. And my very first audits were actually Sarbanes-Oxley as an external assessor. And I was looking mostly at technology controls, but I started looking at business and financial as well as I went along and got experience in all of those. What happens is when you have a lack of control over financial reporting, it means they don't know if the financial reports are accurate. Now, the auditor, in issuing that material weakness, then had to go back and do a whole lot more work on its own to make sure that the financial statements are actually accurate in its opinion. And that's what PwC is saying here. PwC, the external auditor, is saying, we believe that Credit Suisse's statements are accurate. But if you look at PwC's statement, they also said, we believe that last year, but we're having to change our opinion. So what happened to the audit last year? Why did PwC not catch this last year with Credit Suisse as they're going through these scandals and as Credit Suisse is having their problems? And why are they amending previous year's cash flows now? Why is the company doing that? Why didn't the auditor catch it? Well, there's something called audit risk. There's things that are hard to value. There's things that don't have really easy accounting answers for. The generally accepted accounting principles will basically indicate that a lot of things are hard to value, and you'll have 2 or 3 different methods to use it, but there's a lot of judgment from management and the auditor as to whether those are accurate. And then you wonder about the auditor relationship, PwC's relationship with Credit Suisse. If there was going to be a misstatement here and there were issues over financial control reporting, why didn't we see that in previous audits? What happened to cause the auditor now to say, well, we're now no longer comfortable with your methodology management, and we're going to issue this report that says, your management is inadequate for monitoring, for assessing risk, for doing all these things. And notice how it wasn't just a material weakness over a specific account. They didn't say it's a material weakness over your inventory account or over your accounts payable account or your cost of goods sold calculation or your monthly reconciliations of your bank accounts or your bank statements. They didn't go to a specific control, ladies and gentlemen. They say there's material weakness with financial reporting pretty much kind of across the board. It was worded as though you missed a lot of your risk management monitoring procedures. So that's more than one. It's not a specific account or a specific process that's being questioned here. It's a material weakness over several areas within risk management, reporting, and assessment. And so if there was multiple, why didn't the auditor catch it last year? And the point that I want to make to you, ladies and gentlemen, as a former auditor, first of all, no auditors are perfect. Second of all, auditing is done to a reasonableness standard. It is not an 100% assurance of anything. It's never what audits were for, especially like an audit with an attestation report like a Sarbanes-Oxley. They're not 100% guarantee. And not only that, but a lot of risk can exist that the auditors don't catch because they're not looking for it at the time that may bubble up later and cause the auditor to go back and amend a previous report. And I'm not saying auditors are good or bad. I'm not saying PwC was either good or bad in this case. I don't know if there's any malfeasance with respect to the auditor, but I just know that the auditor making this kind of report, there has to be some sort of internal review procedure going on now at PwC saying, why didn't we catch this in previous years? This is not something that just bubbled up, especially in light of all the scandals that we read through that happened to Credit Suisse. That all these scandals about the Bulgarian mafia and all this money laundering type of stuff that they're getting prosecuted for. Why didn't the auditor look at that before? Is that what caused the auditor to do a deeper dive this year and then finally say, yeah, we've got issues with the reports? I think PwC needs to come out and issue a statement here as to why it took them that long to catch it. Again, not saying they did anything wrong, but what caused them to look deeper at some of these things and to write this adverse opinion on the controls around financial reporting for Credit Suisse. What caused PwC to do that? Why wasn't that done last year? Was it the scandals that caused them to take a deeper dive? What was that precipitated that? We don't know. But we know right now we've got serious issues with regard to Credit Suisse. Some of it's level 3 assets, some of it's accounting for difficult things to account for, which are in that audit report. And then the statement of cash flows that had to be modified dating back the last couple of years because of the auditor's opinion. Going forward, what does that mean for the rest of the banking system? Does it stop at Credit Suisse? Does it go to Deutsche Bank? Does it go to Bank of America? Does it go to Citigroup? Who else in the banking system is going to be affected by this? Even if there are no more material misstatements coming in from SOX reports, because remember what I've been saying, since the beginning of the year, we're going to get not only fourth quarter reports on companies and in the banking system, and we know in the S&P 500, the part of the economy that got hit the worst was the financial sector. Financial sector took the biggest shot, followed by the tech sector. But I said, wait till the financial reports come out. I've said this 4 or 5 times on the channel, and the audit reports come out, because those of you that ended December 31st, 2022, not everybody has that fiscal year, but those companies that ended, that are public, that are trading on the markets, have to produce these assertions on internal control over financial reporting. This is called SOX. And these are starting to come out. And we've seen the big first domino come in terms of the internal control and the regulatory environment around banks or Credit Suisse. Are we going to see more? Is it going to be in the banking sector? Are we going to see material weaknesses in internal control over financial reporting in the tech sector? Are we going to see it in the retail sector? Are we going to see it in the consumer staple sector? Where are we going to see these issues? Is this the only one? I would suggest to you, ladies and gentlemen, that there's so much stress in the financial system that this year we're going to see a series of these things. It's going to be concentrated in finance and banking, but it's also going to be in areas of the economy which aren't doing well, like tech and like other areas. And I think we'll continue to see more of this. This is huge. Even though the auditors felt as though the financial statements are now correct, they felt that in previous years. And because of the issues in financial reporting that Credit Suisse has, I'm saying I do not feel comfortable. Even though PwC said they feel comfortable, as a former auditor, I do not feel comfortable. I want to know what additional procedures are being done to make sure Credit Suisse is being whole. And then I want to know, across the banking system, are auditors now taking notices and saying, we're going to dive down into your accounts and dive down further, even further than we normally would, into your financial statements to make sure that you're reporting accurately and that you're reporting correctly. And then I think we as the public need to take a look at these external auditing firms, the PwCs and Deloittes of the world, and say, are they doing their job? How do we hold them accountable? Certainly the PCAOB, the Public Company Accounting Oversight Board, is responsible for that and doing audits of the auditor. I went through those when I was an auditor. Maybe they'll step up their efforts from the regulatory perspective and making sure everything's solvent. But right now, certainly, I think we have an absolute ton of risk in the banking system. I think everybody pretty much agrees with that. Going to the poll, we're going to end up the poll here, guys. It looks like we asked the question, what's your level of concern with the banking system? It ends up 39% high, 31% extreme. That would put us at 80% of either high or extreme. The other 20% is between medium and low, or 70%. Sorry, the other 30% is between medium and low. Looks like you guys have it correct. Thank you, everybody, for joining the program. I did not see any super chats there, guys. Oh, Uncle Robbie did. Thank you so much with a thank you note. Thanks again, Rob. We appreciate the updates. I appreciate that. Thank you for the contribution via the super chat. If you guys are interested as well, remember that we do have access to inexpensive bullion. If you guys are interested through ARC Silver, and I should say ARC Precious Metal, because they do all precious metals. Let's put that up on screen. If you're interested in that, Ian, my friend Ian, does offer probably the best deals on bullion that you're going to be able to get. You simply go to the website goldsilverpros.com. You go down to the middle where it says ARC Silver, and you click on Access Deals, and that pops this little form. You just fill it out and make sure you whitelist the email and this phone number. Ian will either text or email you and get right back to you if you're interested in deals on precious metals. Now may be the time to go precious metals, because while I'm not your financial advisor, looking at what's happened in the banking system, maybe it's a flight to real safety. And I don't know that bonds and dollar are the way to go. I think precious metal are probably a much better option for all you guys. So think about that as you go forward in your risk management and what makes sense to you. But it looks like at the end of the day, the banking system is starting to melt down. It's not just all SVP. It's not just all signature. It's not just all tech sector. Credit Suisse, major issues there. We'll have to see if that starts it starts contagion across the rest of the system. And we'll be talking a pandemic, but not a health pandemic, a financial pandemic may be coming to our doorsteps. We're going to continue monitoring this. Stay tuned, ladies and gentlemen, to our weekly market wraps that we put out on Sunday. we will talk about this stuff, and we'll talk about the economy every single week and preview what we think is going to happen. And you can see when you look at the data on those weekly market wraps where the issues are starting to come up. And we've been following closely every Sunday night. Thank you so much for joining the program. This has been Rob Kientz, your host for goldsilverpros.com. This is the weekly Cowboy Metals live stream. We broadcast from the great state of Texas. Take no BS. Until next time.